Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, personal finance, and most recently, Bitcoin mining related. Now in today's video, Anthony Power and I have a long list of things we're going to be covering. First off, we're going to be talking about ETF in and outflows. We want to talk about the HODL versus no HODL strategy that we're starting to see emerge in some of the various different mining companies. In addition to that, a shout out to last night's video featuring the CEO of Soluna. And finally, you guys, Anthony has brought along some of his infamous tables and charts. We're going to be going through his year-end review article for 2023. This was an absolutely crazy year for Bitcoin and the Bitcoin mining stocks, so a lot to unpack in today's video. Before we do though, please take a second, hit the like button, you guys. It's 100% free and it would really help both myself and Anthony out. If you're not already subscribed to the channel, McNallie Money, feel free to join. We're almost at 41,000 subscribers, which is absolutely phenomenal. And finally, in the comment section below, let us know which of the miners is your favorite, your price target for Bitcoin going into April's halving event, and your outlook for the sector in 2024 overall. Now, with that being said, let's get into today's visit. Okay guys, so that's right. Today's video, back by popular demand, we have Anthony Power. I'm starting to think you guys like watching Anthony more than me, but that's okay because I love visiting with him, and we were just joking before we started filming. I think this is the first podcast, Anthony. You've got better hair than I do, so congratulations, bud, over there. You're looking great. Also wanted to give you a congratulations on being invited to be a speaker at the Nashville Bitcoin conference. So well done, Anthony, and that's going to be a phenomenal event, eh?
Thanks, Bryce. Yeah, it's going to be a great event. Yeah, great. Thanks for having me.
You're most welcome. Now, in the intro, I explained to the viewers, we've got a long list of topics today, so we'll get right into it, you guys. We'll go through them fairly quickly. Feel free to pause the video. Anthony's brought some of his great tables and graphs, so you may want to take a closer look at those. But the first two were actually in the form of a subscriber request. They have to do with the Bitcoin spot ETF, the inflows and outflows, and companies hodling or choosing not to hodl. So I wanted to talk through these, and then we'll jump into Anthony's year-end review article. So Anthony, the first one here, spot ETF. So I think both of us, probably myself for sure, I was really not expecting a sell the news event here. I thought there'd be a tremendous amount of pent-up demand and energy and excitement for these ETFs. We'd see huge inflows that would offset the outflows, and Bitcoin would be off to the races. In actuality, that didn't seem to happen. I took a bit of a haircut, speaking of hair, on my January call options based on that thesis. But Anthony, what we're seeing now in actuality is tremendous outflows from Grayscale, GBTC, that for the first couple trading sessions there, probably a week and a half, we're actually outpacing inflows. So I'm bringing up a chart on the screen. This was a great visual from BitMEX Research on Twitter or X, showing the inflows versus outflows for each of the funds. As you guys can see, BlackRock, Fidelity, Bitwise, those are really the big three players in terms of the new entrants into this market. And what you'll notice on the right, you guys, is we were actually seeing outflows in the neighborhood of about $500 million or $500 million a day on average for those first couple sessions. And that's started to slow now. And we're actually seeing days where there's more net buying than net selling, which obviously is a catalyst if you're looking at supply and demand for Bitcoin price. And in my opinion is why we're now starting to see Bitcoin recover and move up. So Anthony, curious to get your thoughts on how this all unfolded and if it went to plan in terms of what you were predicting.
Well, I mean, it was difficult to have a prediction other than the fact that we felt the approval of the spot ETF would be a catalyst to get the Bitcoin price going, and it certainly did for that literally that first few hours, and we saw the Bitcoin price rise to 49,000. However, it's difficult to know how much was actually already built into the price. The news was getting more and more clearer as we got closer to the date, and it was literally some of these funds were coming out and stipulating the date the actual ETF was going to be approved, and they were found to be correct. But I'm quietly confident now that the amount of inflows into these funds is a good start, and I think that'll only improve. Again, it's just more adoption for Bitcoin. more opportunity to use Bitcoin, to buy products, more retailers taking on, that option to use for customers. I'm seeing it in Europe when I go away, more and more opportunity to use that. And I follow a few people on social media who visit some of these countries like Africa, where you can use Bitcoin to buy things there. So it's just that real adoption. But I fully expect these funds to grow as we continue, because you might find that investors are putting in a monthly amount. So literally every month they might have to buy more and more Bitcoin, because they have to have that sort of like treasury cover for the investments that they have. But yeah, it's been a good start, and I'm sure we'll see momentum as we go forward.
Yeah, it's funny listening to that. When we were going into the approval, I told myself in my mind, don't worry about price for the first couple weeks. It's going to be all over the map. And then sure enough, it was, and I was worrying about price. But definitely an interesting dynamic to follow. And we'll continue to watch that one as we see the price of Bitcoin changing here, you guys, and some of these ETFs picking up steam. We actually had a fellow countryman of yours, Anthony, on the program a while ago named British HODL. And he gave a very interesting concept that the people that were setting up Bitcoin as a trade strategy going into the ETF, those are short-term or swing traders. The people that are now buying these ETFs, the pension funds, the BlackRocks, the investment banks, these are not low net worth individuals. These are not people who need to sell their shares on Friday to go out on the weekend. These are people that are looking for allocation into a new asset class. They're going to hold this ETF and correspondingly the Bitcoin for years and years or decades or generations. So I do think the dynamic has changed, and I thought that was really an astute kind of observation from British HODL. So the next one that a couple people have been asking about, Anthony, is to HODL or not to HODL, I guess is the question. And you've got a really good chart that we're going to look at a little bit later showing the company's current HODL. But I remember having Dan Roberts from Iris on, and he specifically told me when I asked him this, in their opinion, holding Bitcoin on the balance sheet is actually doing a disservice to investors, because if they were to sell that Bitcoin, ramp up operations, buy more miners, they could exponentially increase their Bitcoin production. Now, on the other side of the coin, we've had CEOs that say, hey, you know what? Bitcoin is going much higher, exponentially higher. They believe in that bullish thesis, and they think, hey, the gains we're going to have by being exposed to Bitcoin from a balance sheet perspective are going to outpace anything we can do by actually selling and upgrading or whatever the case is. So those are fundamentally the two camps. Anthony, walk us through what you think about each of these strategies, and obviously Bitcoin price is a huge factor here, but is one better than the other?
I don't think we can say for certain either way at the moment. When the Bitcoin price is rallying or increasing, which we've seen over the last 13 months now, it reached 15,600 by the end of December 2022. And that was at its bottom, literally at the last day of the year. And then all of a sudden in 2023, we've seen this rise. Bitcoin achieved 155% increase. So, when it's rising, everyone's saying, HODL, HODL, HODL. And, when it's falling, they're not saying that as much. The likes of Iris Energy and actually CleanSpark, when before they started to grow a little bit of a HODL this year, were both selling their Bitcoin regularly, to pay for their capital growth strategy. And Dan's point of view is it's an equal point of view to other miners who want to HODL. I mean, he's saying by using that, selling that Bitcoin daily, which they do, that's giving them the funds to support their growth and their current operations, and meaning they don't have to go out full board and dilute shares in the company to excessively to raise sufficient funds for their growth. Obviously, in literally over a week's time, we're going to see two of the miners bring out their reporting updates, and interestingly, one's going to be Iris Energy and the other's going to be CleanSpark. So that'd be quite good to compare and contrast, how both of those companies have used their at the market offerings to grow, We do know CleanSpark, for the first 9 months of 2023, they literally sold 113% of the company in shares to pay for their growth, and they've got a great growth strategy. That they're at 10 exahash as we speak at the moment, growing to 20 exahash early into the first half of 2024. Iris Energy equally haven't used the ATM as much from previous filings. However, we'll see their update next week, and they've got currently they've achieved 6 exahash, plan to be at 11 exahash probably by just after halfway through 2024, with options to buy a further 9 exahash to get them to 20 if they take up that option during this year. So it is interesting. Of all the miners, we know Marathon have got the biggest hold at the moment, and they last reported, I think it was like 15,174 Bitcoin was their total in their HODL, and that's like 600 million, and that's great. But they mined nearly 13,000 Bitcoin during the year, and they've HODLed a small proportion of that total amount. So they're still using a lot of their production to pay for operation expenses. Hut 8 have the next largest HODL, nearly 9,200, and they too were using their HODL. I mean, they were I suppose of all the miners, they were the most ardent miner who said, 18 months ago they'd never use their HODL until it got to like 500,000. But we are seeing, all the miners are selling a percentage of their production. And there's 4 or 5 miners who are selling all their production to cover their costs and to not rely on dilution. And they put that in their update. So, as I say, there's 2 distinct strategies. But the strategy that people, even the hodlers are still selling a good proportion of their production. If we look at what, CleanSpark produced over 7,000 coins, they've hodled 3,000 coins in the year. So, you could argue, they've not even hodled 50% of their production. So, miners are using their HODL. And as I say, I don't know what the Bitcoin price is going to be past the halving, and I don't know it's going to be by the end of the year. So time will tell as to which strategy plays out. But I don't see, a favoritism going to either side. I think both have been thought through strategies, and let's see how this works, how this plays out in the year.
Yeah, it is going to be an interesting dynamic to watch, Anthony, over the next couple months. Speaking of differing strategies, that's actually a nice segue into the next section here. We had the CEO of Soluna on last night, John Belazaire, super well spoken, really smart guy, serial entrepreneur, and gave a really good explanation, what I thought, of the various different 4 kind of business streams or revenue streams that Soluna is looking to set up. Quite different from a lot of the pure play miners we're seeing. They focus on prop mining, supporting stranded renewable energy, wind farms, a lot of different things that maybe you don't see with some of the main miners we cover on the channel. So I wanted to give a shout out to Soluna. Anthony, I know you saw the drone footage in that video. Super impressive design. I think you said it actually looked like a computer graphic at the start, just because it's so precise and pristine. But any takeaways from the video last night, Anthony?
Oh, I was impressed. I mean, Soluna are, of the public miners, one of the, in terms of market capitalization, one of the smaller miners. But listening to that update from John last night, and actually, one thing I'll say is he does provide good updates on the company, and he does come across well. Since that video went out last night, I've been getting a lot of messages saying that, shareholders or people who were interested in buying some of these mining stocks were looking at that video and were very impressed with his update. I mean, for a company that's got a market cap, in single digits millions, so less than 10 million, and they've got a planned EBITDA, I think it was like 24 million he quoted last night, right?
Yeah, and they said they're actually revising some of those projections, obviously giving bull bear cases, but yeah, they felt very confident, and I mean, numbers look awesome.
Yeah, that's pretty good. I mean, we know they're effectively an infrastructure company, and they're delivering advanced computing and solving this, like they've got the waste energy, and they've got 4 different revenue streams. So again, it's one of these miners who don't just rely on Bitcoin mining, self-mining as their main focus. In fact, I'd say Soluna focus on quite a lot of other business strategies other than self-mining, and seem to be, have a plan to deliver on those. And this will be really interesting to watch this company through this 2024 now. And I'm sure we'll get John back on the podcast and giving us regular updates, to see how well that plan's meeting out. But yeah, no, I enjoyed the video last night. It was a good one.
Right on. Yeah, I'm glad. I thought it went well, and you're right. We're going to try and get the CEOs or upper management on a couple times a quarter pretty regularly this year. So again, if you guys have questions, leave them in the comment section below. We'll make sure they get answered. And thanks again for those who asked about the HODL strategy and the ETF inflows. It's always nice to kind of talk on a macro level. So zooming in a little bit to the Bitcoin mining results, specifically from last year, Anthony, you just put out your year-end review article published by Compass. This is the one that I look forward to. This is kind of the cream of the crop, or icing on the cake, or whatever you want to call it. But a couple really cool visuals in there that I wanted to talk through here, get your take on, because they're very relevant to a lot of the discussions we've been having. So I'll bring these up on the screen. You guys feel free to pause as we're talking here. The first one is the 2023 mining metrics. So this is kind of a summary table of the year. Does a good job illustrating the current HODL of the company. It also shows their starting and ending hash rate, a number of kind of the key metrics to compare and contrast the companies. So maybe let's kick off here, Anthony, and walk us through what you saw throughout 2023.
Yeah, I mean, 2023 as a whole, was the reboot that we needed in Bitcoin mining. We'd seen the price drop in 2022 down to, like I've already alluded to, 15,500. 2023 saw that increase by 155%, ending the year at just over 42,000. So that was a good rise in the Bitcoin price. Because the Bitcoin miners are really correlated to Bitcoin, the Bitcoin miners did really well during the year as well. And so it was interesting to see, having looked at the difficulty to mine and the global hash rate both increasing by over 100%, what would the miners do to try and keep up with the global hash rate? I mean, if a miner doesn't keep up with the global hash rate, they're effectively falling behind. So, a number of the miners were actually able to grow their hash rate more than 100%. So certainly keeping up with the global hash rate and the mining difficulty, enabling them to maintain a level of revenues for the companies. And, we saw some really, really good growth. I mean, we talk about, Iris Energy. They started their hash rate, at the beginning of the year was, literally just over 1.5 hash rate. I mean, it was high to that in 2022. They had the issue with a loan with NYDIG, and they defaulted on the loan, had the machines effectively taken away, and so their hash rate dropped. And what they did then was they were actually able to use cash reserves on the balance sheet to actually build back up that hash rate. So, the starts the year at 1.5, and by sort of the middle of the year, they got to 5.6 exahash, and they're currently at 6 as we speak today. So they probably had the biggest growth rise in hash rate during the year, closely followed by Marathon Digital. And Marathon Digital, 2022 was their problem year. They had so many machines that were just in storage, waiting to be put into sites, waiting to achieve that 23 exahash. They finally did it in December of 2023. And, their hash rate grew from 7 at the start of the year to close to 25 at the end of the year. And, they've got a growth strategy to get to 30 in a short space of time. So the machines are already ordered and they'll be start put into some of their sites. But we saw that. And then we saw, other miners who weren't able to take advantage, and maybe, some of the smaller miners, certainly the likes of Argo blockchain, who haven't increased their hash rate throughout the year. We know the difficulties they've had. SATO technology hadn't increased their hash rate. So some of these miners, I think we alluded to on the last podcast, the difficulty of raising capital is going to be a challenge for them. But this is, again, it's one metric. I mean, we know that SATO technology, in terms of where they, from a performance perspective, there was only the likes of Bitfarms, Iris Energy, and Hive Digital were able to sort of like produce monthly better results than SATO. And a number of months, actually, SATO came out top miner. So, you know, they're in that sort of like that top 4 grouping from a production perspective by exahash. So they do tend to get more out of their machines. And people say, why is that so important, Anthony? I say, well, you know, you're only as good as what you're doing currently. And so, you know, when I put these tables out, you know, you're looking to see who's doing well at the moment, who can get the most out of their machines. And we saw in December, Marathon just literally, you know, break the all sorts of records with what they delivered. Now, the question will be, because Marathon, you know, haven't done that all throughout 2023. I mean, there's only a couple of months where they had really good monthly productions in terms of what machines they have plugged in. Can they in 2024 start to have that consistency that they had in December? And early signs are there may be an issue because people are identifying their wallet at the moment, and there doesn't seem to be as much production as people were anticipating in this sort of latter part of January. So I'll be looking with a watchful eye when their mining update comes through, because they achieved 1,800 plus Bitcoin in December and had people in a bit of a stir. You know, that was a significant amount. Will they get anywhere close to that in January? It looks unlikely at the moment, but let's see what potentially they can bring out. And so, yeah, so you know, hash, as we've seen, you know, literally half the miners managed to increase their hash rate by 100%, and some of the miners, although they increased, didn't quite get to that level. So 2024 will be interesting. We know there's a lot of orders out there, a lot of miners going to grow their hash rate. See if more orders come in before the halving, because it'll be tricky once the halving's in. But yeah, that's all on hash rate at the moment.
Yeah, we've talked about a lot of the big orders, Anthony. So growth, I think, is something we'll continue to see here. Why I wanted to specifically bring up this table, the starting and ending, is just to talk about the dynamics. So this is the only industry, you guys, we've got like a global difficulty, and you've got a halving phenomenon, which we've all talked about, and we understand what that is. But what's interesting there, Anthony, and in our first podcast, you told me, if these companies aren't growing, they're shrinking. And as a result, and as you can see on these charts, growth is a main priority for these companies. But the problem is, and what I wanted to mention here, you guys, is there's only a few ways to finance growth. And investors hate dilution, right? We've talked about the D word. They don't like that. You just talked about hodling versus not hodling and selling some of your hodl to support growth. Generally, people aren't a big fan of that. People don't like taking out debt, especially in bad interest rates environment. So it's really the better of a few evils here, Anthony. And I just wanted to point that out, that it's not like these companies are just going out and saying, hey, let's dilute for the fun of it, or let's sell our hodl because we feel like it. They have to grow to stay relevant, and they have to finance that growth by one of those levers, right? So I just wanted to point that out. Because a lot of times you see in the comments, it's easy for people to say, well, why would you do that or sell or whatever? But at the end of the day, you have to pay for it somehow.
Absolutely right. And it's the miners who are able to grow, get the best prices for that growth, get the best machines for that growth, also at the same time, get the best energy prices for their machines, because it's all linked together. So we look at efficiency, and you know, Marathon Digital at the moment have the best efficiency from a fleet of miners. Their efficiency is around about 24.5. The industry average is about 35. And we can look at the table there, and one miner is at 35, and that's Bitfarms. So even though Bitfarms' efficiency at 35, they still do really well monthly with the lowest efficiency in that table. And they've got some massive orders coming through for S21s to get to 17 exahash, potentially get to 21 exahash, and that'll bring that efficiency right down. And in simple terms, with regards to efficiency, if you take an S21 at 200 terahash per second, and an efficiency rating, you know, literally of half or close to half of like the early edition S19s, what you're saying is that that machine is literally 4 times as efficient. So, you know, it can produce Bitcoin, you know, far cheaper than the S19s. And so, you might be paying, and actually at the moment, miners are paying less now for S21s than they were paying for S19s 18 months, 2 years ago. So again, it's like for those miners who've got the capital, it's been a bit of a win-win to replace some of their older machines. And we'll see that continue. So, the likes of Marathon, the likes of Riot, the likes of CleanSpark, Iris Energy, Bitfarms, TeraWulf, Hive Digital, putting in some really big orders to grow that hash rate in 2024. Let's see, and let's see, Bit Digital as well. They put some big orders in to grow their hash rate. So, they're at 2.5 at the moment, hopefully by 6 by the end of the year. We'll probably see an order from Bitdeer. They've got some sites being built. So, yeah, efficiency is really important. It's one of the key factors going into that halving, because you want your price to be, you want to be able to mine Bitcoin at the cheapest price, and having the best machines with the lowest efficiency gives you that.
Yeah, it sure does. And just another example of one of the variables in this industry. If you like playing chess, you might as well start a Bitcoin mining company, because there's a lot of moves to think about and a lot of pieces on the board here. Now, in terms of the last chart, Anthony, save the best for last, in my opinion. It's a show me the money chart here. Basically showing return on investment or return on the share price over the 2023 period. Core Scientific, if you want to use the analogy, high risk, high reward. People who were putting their money into cores during the Chapter 11 drama obviously were rewarded very handsomely. Marathon, huge investor fan base and rewarded very handsomely. I think the average was in the neighborhood of about a 5x or 500% return on the year, which I think any investor would be happy to take. But Anthony, bring us home. How did the companies perform, and are we going to see something like this in 2024? Or what's your thoughts there?
So 2023 was a great recovery, and you're quite right. The average increase in share price for those that are in the table there was about 500%. So it wouldn't have been too challenging for people to have bought some miners in 2023 and not ended the year in sort of like in the green and with a profit. But bear in mind, all these miners are still significantly down from their 2021 prices when Bitcoin was 69,000. So as much as we feel they've made a recovery, there's still a long way to go. I mean, Core Scientific now, they increased. If you'd have got in at 4 cents, and they, at the start of 2023, when they just got into Chapter 11 and took that risk, then thinking they'd come out, because many a time companies don't come out of Chapter 11. It is an opportunity to try and speak with creditors and look at plans. But they worked really hard for the 12 months to come out of Chapter 11. They came out of Chapter 11 early in January. So if you'd have been a gambler and bought in at 4 cents, and I've seen some trades at that level. People have shared their trades with me, and I was like amazed they went in there and gambled that level. Even at the end of the year, where the share price increased significantly, it's still close to 9% down on where it was prior to 2020, prior to 2022. So it still had a long way to go. There's still a long way to go for some of these miners. Some of the older miners there, the Hives and Huts had really great 2021s, earning lots of profits, great revenues, great followings. Share price was going really well, and then we had the sort of like the bear cycle. Share prices came down. So we've had a bit of recovery last year, and this space is not for the faint-hearted. What do I think in 2024? I mean, it's based on what we think the Bitcoin price is going to do, and as I say, we don't know what the Bitcoin price is going to do. We'd like to hope that post the halving, maybe 2, 3, 4 months after the halving, we see some growth to put miners back in profits for mining. Whether some of the fees are increased to help miners that way, that might actually happen. But I don't think we'll see the sort of like, unless the Bitcoin price spikes to 6 figures, we're not going to see these miners achieve 500% this year, not year on year, unless we see a real spike in the Bitcoin price. If the Bitcoin price really spikes, the miners will follow, and the miners are more volatile than Bitcoin, so those levels of gains will be higher. But yeah, it was a good 2023. Especially if you entered the market at that point. But some people who entered the market in 2020, 2021 are still licking the wounds from those years. So maybe they sort of bought some shares last year to dollar cost average down their cost position, which in certain times is a sensible thing to look at. But yeah, 2024, there's optimism, but I wouldn't expect 500% growth this year.
Well, I'll tell you two things I've learned, Anthony, is one, expect the unexpected in the Bitcoin mining space. And number two, I definitely did not get in at 4 cents on Core Scientific, or I probably wouldn't be sitting here right now. But phenomenal 2023. And as you said, for all the mining community, a great showing and a great turnaround year. And we're hoping 2024 is just a continuation of that. Guys, in the comment section below, let us know your top 3 picks for this year. Price targets if you feel comfortable. We're happy to do some giveaways. We just gave out a bunch of swag last month. The gift boxes are starting to show up. We're happy to do that. We love to see the comments. If you're not subscribed to the channel, McNallie Money, feel free to join. Follow Anthony on Twitter, on X, on his Patreon group. You guys, there's a lot of additional content out there to find information and value for your trades. And with that being said, we'll see you in the next video. Anthony, thanks for your time, and we'll talk soon.
Thanks for having me, Bryce.